the people that got sucked into this perception game that FTX was playing, that, the politicians, the regulators, the investors, they all now are trying to just sweep it under the rug and say, oh, I didn't know about this financial fraud. It wasn't just a financial fraud, right? It was a fraud of perception, which they all played a role in. And I think ultimately, people will realize that.
Nick, I am so excited for this. I saw your tweet and I replied man, this would be such a good show. I'm so thrilled that you agreed to do it with me. So thank you so much for joining me.
Thanks for having me, Harry.
Not at all, but I want to start with a little bit of kind of two origin stories, really. One is obviously how you found crypto for the first time, and then obviously is on the firm. Just take me back on the crypto side. How did you first find crypto and come to join Coinbase?
So I've always been an internet person. In middle school, I was really interested in sneakers. I was, buying and selling and collecting Jordans and Nikes, and I played a lot of basketball. So I was super into sneakers. I was spending a ton of time on Nike Talk, which was kind of the early sneakerhead forum. I've just always kind of been gravitated towards the internet. And even more so than the physical world around me in some ways. I think I'm kind of unique in that sense where, when I first heard about Bitcoin, it was this Wired article talking about this magic internet money that was being used to buy guns and drugs on Silk Road, right? That was kind of the early media narrative. And if I asked the people in the physical world around me, what they thought, like everyone else at that time, they would have thought it was stupid and they would have told me not to spend any time on it, right? But I wanted to see who was on the internet talking about this. And I stumbled across Bitcoin Talk, which was the first online forum for Bitcoin that was created by Satoshi Nakamoto, the founder of Bitcoin. I saw on Bitcoin Talk that, the media narrative was one thing, right? Talking about this, magic internet money that was being used for illegal stuff. And, but the reality was very different. I saw kind of this community of people from around the world. They weren't aligned by physical location, but they were aligned by shared belief system and economic incentives. After spending some time on Bitcoin Talk, that's kind of what led me down the rabbit hole and ultimately decided I wanted to make a career out of the space.
And you did make a career out of the space. You joined Coinbase, and then you take the decision that actually, I'm going to switch sides of the table from operating to venture and investing, and I'm going to found one confirmation. Can you just take me to that moment of transition and why you decided to do one confirmation and why then?
Well, frankly, I got pushed out of Coinbase. I wasn't a great employee, I think is the truth. I think I did a lot for Coinbase in the early days, but Coinbase got to a certain point where I wasn't great at kind of office politics and following rules and directions and stuff like that. And, at the time, I technically, left, and that was how it was framed to the company and things like that. But I effectively got pushed out. And at the time, that was very painful, right? That was probably one of the lowest points in my career, I would say, because I believed so much in both the space and the company. And I put a lot into the company as well. I think it was a great thing ultimately because it wasn't the right fit. But at the time, I was like, shit, what am I going to do now? I love this space. I know Coinbase is going to be $1 billion company. Did I just fumble the bag? What the hell am I going to do next? Right. It was at that point that, I decided that, that venture would be, what I could be world-class at. At Coinbase, I was really good when it was just, a few people figuring shit out. I had, really good ideas, and I could just do stuff. And then once you get within a big company and it's like, there's all this bureaucracy and stuff, that's not what I'm good at. And I thought, I know the space really well. And I think I see what's going on and I understand products better than anyone. Why not start a fund to invest and help the founders that I'm investing in? And that's kind of what happened with One Confirmation. That's how One Confirmation came to be, I guess. There's obviously a lot of other stuff, but at a high level.
I've just been thinking about how to phrase this politely in my head.
You don't have to be polite. You don't have to be polite.
Okay, well then respectfully, you were kind of, I'm really sorry, by the way, for you being pushed out of Coinbase, but respectfully, it also made you who you are today, which is very, very successful. So congratulations in that. I often think sometimes the hardest elements can shape you. But no offense, kind of pushed out of Coinbase and then raising a $26 million fund, like that's quite a big jump, Nick. Mm-hmm. How does that happen? You either have a lot of rich friends, a lot of rich friends. How did that happen?
No, I don't have any really. I didn't have any really rich friends. I don't think, but had built a strong personal brand while I was at Coinbase, and I think that helped a lot. Right, I wasn't just working at a company. I think a lot of people, to me, like working at Coinbase, it was more than working at a company. I was like working for an industry because crypto was very early, obviously when Coinbase started, and Coinbase was kind of leading the industry in a lot of ways. And I wasn't like a Silicon Valley person that just wanted to work for like a brand name company or something like that. Like I genuinely believe and still believe that, crypto is the most important social technology of our lifetime. And, I was going to do anything that I could to help it grow. That was kind of my mindset. It wasn't like, I'm working for this, brand name Silicon Valley company or anything like that.
Was it easy to raise that first $26 million?
Well, what helped in between was after Coinbase, I ended up joining Runa Capital, which is a venture fund. It's not a super well-known venture fund, but really good Russian entrepreneurs that had founded a few multi-billion dollar companies that were investing in mostly like enterprise SaaS companies. But they were also curious about crypto. So I joined Runa. That was kind of my bridge, while also doing a lot of stuff personally, right? So I got into venture through Runa, but I was also, I started a newsletter called The Control at the time, where I was, I was writing about the space a lot. I also founded an event called the Token Summit, which if there's early kind of crypto people, they'll know. Token Summit is kind of a legendary event within crypto. It happened right before kind of tokens kind of took off in 2017, and it was kind of all of the best founders from around the world in the space coming together to talk about tokens and crypto. And it was really cool. It was a 400-person event. And there was so much demand that tickets were selling on Craigslist for like 4 times the price that we were selling them for. So this was a really, big event at the time. And I think it was a lot of what I've learned in my career is like, you need to be at the right place at the right time. It's like timing for both entrepreneurs, for venture, for whatever it is, like timing is really important. And I think it's not luck. You can kind of use your knowledge and learnings to assess, what a good time is, right? But timing is important. And I think there were a lot of things that kind of came together for me. It was Runa, it was Token Summit, it was me continuing to believe in crypto and kind of build a brand. All that came together to help me, raise, as you asked, how did I raise a $26 million fund? That was kind of how I was able to do it.
Dude, 2015, I started that, 20 VC, way before podcasting and venture were cool. Just as kind of 2 years in, venture became cool. 3 years in, podcasting became cool. It was total luck on adoption cycles of both, really, in terms of mainstream media. So I totally agree with you there. That's fascinating.
But I don't think but I think saying it's luck is maybe selling yourself short. I mean, you were curious about what was going on in terms of content creation on the internet, and you were, I'm guessing, an early consumer of podcasts, and that helped.
Oh yeah, for like years before, like 2009. Yeah. I was 100%. Okay, so if play this game, if you were to put luck and skill, which would you say, if you were to put numbers against it, your success is?
I think it was about 90% skill, 10% luck. I think it's politically correct to say, there's a lot of luck. I think a lot of really successful people say that. I feel like I made my own luck in a lot of ways. I feel like I had a lot of bad luck that I persisted through. It was my determination and kind of grit more than anything, and that is a big skill. I think having that, it's not skill in the sense that I'm smarter than everyone else or anything like that, but I think determination and grit and belief. At the end of the day, I think belief, having self-belief, is a skill. Again, it's not saying I'm smarter or things like that, but it's like having these unique traits that I think anyone can have, but you need to have belief first and foremost. So
I think it's like being an entrepreneur. It's persistence. It's going through the shittest of shit days and coming back tomorrow and saying today could be different. Can I ask you, I'm just too interested, what was the worst luck that you went through that you persisted through?
Yeah, I'm talking about some things I haven't talked about really publicly, but I was working at Coinbase, but still in business school. I had all my money in Bitcoin on Coinbase, right? And that's how much I believed. I basically emptied my bank account, put it all in Bitcoin. This was before Coinbase had two-factor authentication, right? Everyone knows now that if you have a Coinbase account, you have a password that secures your account, but also you're using Google Authenticator or Authy or two-factor. Literally like 2 weeks before Coinbase added two-factor authentication, there was a fairly sophisticated phishing attack that on a number of Coinbase employees and other people associated kind of with Coinbase, and I was one of them. So I remember, the morning it happened, I was like, groggy. I was in business school at the time. I was groggy from a night out or something, and woke up, got an email from what appeared to be a Coinbase email, but it wasn't. I wasn't careful, and at the end of the day, it was my own fault. But I basically got phished. I got an email saying that Coinbase updated terms of service. I clicked the link to try to update the terms of service, log into Coinbase to do so, logged into Coinbase with my password. Boom, the hacker got into my account and drained all my Bitcoin. So it wasn't a ton of, in USD at the time, call it $50,000, but it was the only money that I had, and lost it all from that phishing attack.
What did you do then? I think because that this next step is the difference between, sorry, it sounds awful, but winners and losers. Losers cry and go to their friends and say, I was unfairly cheated. What did you do?
I think I came close to crying, honestly. It's like it was very painful. My wife remembers, I'm sure. Yeah, it took about 24 hours, and it's like you feel like shit. You blame other people or things like that. I certainly thought about like leaving the industry, but at the end of the day, it's like my belief in crypto more than anything else. It's like led me to the thinking like you need to use this to level up. At the end of the day, it was my mistake. They caught me slipping, right? So it's like you need to use it to level up and to motivate you to go bigger. That was kind of the lesson. And it's still, this is still an issue in crypto, obviously hacking. And we all know someone that's gotten, phished or clicked a MetaMask link or something like that. And I still talk, I have friends that come to me all the time. It's kind of a big unknown secret, unspoken secret, I should say, in crypto, like how many people actually get hacked, and no one really talks about it. But yeah, you basically just have to use it to motivate you and to level up to go bigger. So that's what I tried to do.
I know that you're a sportsman and you're competitive, so we can talk about that later. But that is a shit day, isn't it? You're like, fuck, I don't drink anymore, but that's the day when I would need a mojito at 9 a.m. Okay, I want to get to one confirmation. Man, the scaling and the evolution is incredible. I want to start on how big is and I'm going to ask some pretty base questions, but I live in standard venture world, and so it's different. How big is the fund, and how do you think through the right size of fund to raise?
So our first fund, which was launched in 2017, is 26 million. 26 million at that time in venture for like a first time fund manager is is big, but in crypto is actually pretty small. And I actually could have raised much more. And a lot of people in crypto is like, oh, why is your fund so small? It's like kind of looking down on me that, I had such a small fund. That just is the time in crypto. It was a bull market, and in bull markets, and there's a lot of FOMO. You can really capitalize on that. I thought it was important to start small and be disciplined, particularly because like our focus is very early stage, kind of pre-seed, seed in products that we deeply understand from a user perspective. So the thinking was $26 million fund, make between 20 and 30 investments of between 500K and a million or so in terms of initial investment. So that was kind of the first fund and the thinking.
Okay, so that's the first fund. Love that. Well done for the discipline mindset. Not common in this industry. What do the second and third look like? How do we get to $1 billion in AUM?
Well, $1 billion in AUM includes is kind of the mark to market, right? It's the value of the total portfolio. We've stayed fairly small in our fund sizes. So Fund 2 is 50 million. Fund 3, and that was 2019 vintage. Fund 3 is 130 million, and that was 2021 vintage. The NFT fund, which is a separate kind of thing that we do, is about 80 million.
We're going to talk about NFTs later. I have to ask, in terms of actually, you mentioned there 30 companies per fund, right level of diversification with that. How do loss rates in crypto investing differ to normal, or are they very similar? How do you think about that? And downside protection as well, I guess.
We've seen in our funds, loss rates have been lower so far. And again, we're still 2017 vintage, we're about 6 years in. So, there's still a long way to go. But like in our Fund 1, we have, I believe it's 22 investments in that fund, right? So I said about between 20 and 30 in each fund. And that's how every fund, even Fund 3, which is 130 million, we're still doing early stage, bleeding edge crypto. We're still doing kind of first money in. Like, we haven't changed our strategy. We do bigger checks now, but it's really the same strategy. And that's something I think that has gone wrong in crypto is like, when you have a lot of money being thrown at you and a lot of hype and things like that, you can go in different directions and raise massive funds, start doing growth stage. I get why people do it for, to make more management fees and to feel more important and things like that. But we've stayed very disciplined and focused on like what I just enjoy doing, which is like bleeding edge crypto. So that's what we do. I think I got a little off the question that you asked, but
no. So we see less loss rates when you think
yes,
about
you loss rates in the first fund, 22 investments. We've only we haven't had any zeros. We've had 2 projects that basically dissolved, but they actually gave back in one case about 50%, and in another case about 70%. So we actually haven't had any zeros in the portfolio at all. So that was Fund 1, but then Fund 2, Fund 3. I think that's pretty unique, and probably within crypto, especially, people would. There's all these blowups and stuff. I mean, we've been, I think, very disciplined, and we do our homework. We're not investing in narratives. We're investing in like founders that we actually spend time with and want to back. And the vibe check's important, right? It's like you can't just be investing in the narrative.
With hype cycles in crypto, did you see the transition from hardcore lovers of crypto founding companies to tourists who did crypto because it was hot? Did you feel that transition?
Yeah, 100%. Every bull market, you get that, right? There's people that are in it for different reasons, right? I think, and everyone to some extent is in it for the incentives and the money, right? It's not to say that's not a big part of it, but I think there's a spectrum by which you can be focused on money, and I think there's a healthy spectrum for founders that want to be billionaires and make a lot of money, but also in doing so provide real value to the world. And then there's also founders that want to do that while just extracting value to the world, right? And there's a wide spectrum on that.
And so these rounds that we're investing in, are these tokens? Are these equity rounds? How do they look in terms of
both? That was something LPs early on asked a lot. And this is when we raised the first fund, it was in the middle of kind of the ICO boom. And so some people thought, oh, are you investing in ICOs? We didn't invest in one ICO. And some people were like, oh, you're not investing in ICOs. This is like the thing that's happening in crypto. How are you not investing in ICOs? And we weren't necessarily opposed to ICOs, but what we saw was the founders that were doing ICOs felt very, short-term focused as opposed to long-term focused, right? They were doing the ICO because it was a way to raise a lot of money. They weren't really thinking strategically about how to build a product for the long term that made sense. And the founders that we were talking to at the time that were thinking strategically about building a product that was useful for the world that could provide real value, they were just launching typical equity-based businesses. We're not religious about anything really. We're very practical in kind of seeing what is happening in the market, not on the surface level, but in talking to founders and to making decisions based on that. In terms of like the private stuff that we did for Fund One, it was very much equity, but we also very much believe in tokens as well. So our token deals were more buying, like we bought a significant amount of Bitcoin and ETH as well in that fund.
Can I ask, when we look, you obviously posted on Twitter the 5.13x distributions back, which is amazing. When you look at those distributions, was that equity that converted and it was an acquisition or it was an IPO or whatever that was, or was that largely tokens? I'm just intrigued how much of the liquidity came from equity versus tokens.
Yeah, it was mostly equity, actually. So this is another thing too, especially you don't spend a lot of time on crypto Twitter, Harry, but I do. And there's a lot of hate, I would say, for crypto VCs. And I understand that because a big part of the crypto VC game is doing these private token deals. And then you kind of build some prestige, media narrative, hype, and then sell the token to retail. And then retail gets sucked in and the VCs kind of dump tokens on retail. That's like a big game being played within crypto VC.
Is that even allowed? Like I've heard discussions around kind of SEC investigations before. Like, is that even allowed? And should that?
Is it legal? Do you mean?
Yeah,
it can be. I mean, there's nuance. Like there's certain holding periods that you're subject to and stuff like that. So it might not be as simple as that, and that's not happening in every case. In some cases, you have to wait a year before you do that, so it's not as blatant as like immediately listing. But I mean, by the way, this is what FTX. A lot of people weren't paying attention, and Silicon Valley invested hundreds of millions of dollars into FTX. FTX was doing exactly this. No one was paying attention to it, apparently, and retail was getting sucked in. So FTX, Alameda was their investment arm that was basically investing in these token projects. Then FTX, the exchange, was listing these tokens, hyping up the tokens to their users. And again, I don't know how quickly they were dumping. That's the piece of it. But again, it's like you have private investors that are getting better deals, and then these tokens are being listed on exchanges. The dumping part of it is what there's gray area on holding periods and stuff, and may not be allowed. But if you're doing this, holding for the appropriate time and then dumping, that is technically legal.
I don't like name calling, and I think journalists often are done for it, and I just think it can be petty. But is that, and so I'm not going to name anyone here, but is that like across industry, or are some players worse than others?
No, I think some players are worse than others, right? It's certainly not cross industry, right? Like there's a lot of good players in the space that aren't doing that at all. Yeah, I'm not saying it's
are these
cross-industry.
materially impacted in terms of their deal flow? Because I've heard this before, and I'm like, well, surely no entrepreneurs want to take their money if they're like highly criticized in crypto communities. People hate them. Surely no one wants to work with them.
There's certain founders that that go for the prestige. Maybe they get some hate from anons on Twitter or something, but they get press and they have prestige.
Are crypto rounds collaborative? I remember talking to Avichal at Electric, and he was like, the lovely thing about crypto is like there are a lot more collaborative rounds than traditional venture. Are they really? Because to me, if it's an equity raise, there's still a allotted allocation and you have to compete.
I think it depends. I think it feels similar to venture. I mean, there's some firms that want to take the whole round and not collaborate. There's other firms that like to collaborate a lot. I think I don't know. At the end of the day, it depends on the founder. I think a lot of founders like it also depends on size and fund size. Like one of the reasons we like to keep a relatively small fund size is like we don't need to take the whole round, and there are a lot of great angels to have on board. So I think I don't know. I don't feel strongly that it's much different than traditional venture. I think that's kind of a narrative that some people believe, but I don't know.
We mentioned that the great returns so far, 6 years in, 5.13x. How do you think about when's the right time to sell? It's a very difficult thing to do. How do you think about liquidity planning and management?
I think it's prudent if you have a big winner at the early stage, call it Series C or beyond, to take money off the table if you can. You can debate about how much, but we basically had some big winners that we sold somewhere between 10 and 30% of the position. We invest in things that we believe in over a 10-year period. We're not like selling the majority of our stake in any position after 5 years. But if you have a big winner, I do think it's prudent to take cash and return it to your LPs. So that's the approach that we've taken.
It's funny, you tweeted before when it comes to kind of performance of crypto investors that you should actually be asked the question and benchmarked against, do you outperform Bitcoin and Ethereum? Can you just explain how you thought about this in the context here?
Well, it's pretty simple, right? I mean, as a venture manager, you get paid 2 and 20, maybe more, maybe a little more, maybe a little less. But those are meaningful fees. The reason that you get those fees is because you can outperform, an index. And, every private equity firm, uses a public market equivalent. So if you're investing in healthcare, you're measured against a basket of public healthcare companies, right? Or whatever the industry is. So, the same needs to be true in crypto where, an investor can just have a basket of 50% Bitcoin and 50% ETH and hold it for 10 years and only pay a 1% or less fee to buy it. Every LP should be thinking, if I'm giving this fund manager money, are they going to be significantly outperforming that basket to justify the 2 and 20 fees that I'm giving them.
Do you think venture investors should publish their returns annually, biannually?
Yeah, 100%. To me, it's one of like the fakest parts of venture capital. It's like it feels like everyone's competing for prestige. Everyone talks about fund size or, is trying to get press, these kind of vanity, metrics that aren't really related at all to what the job really of a venture investor is, which is to deliver, good returns for their LPs. The reason that fund size is the metric is because, the incumbents want it to be that way. The incumbents they've got great relationships with these institutional LPs that allow them to raise these big funds. If everyone viewed fund performance as the metric of success. The big incumbents wouldn't have the prestige that they have. There's also the regulatory issue, which I think is there's ways that you can be transparent with and also make sure that you're not violating any regulation issues, but there's also historically, regulation has caused venture to be very kind of private and secretive and not as transparent as I think it would be beneficial.
Do you think the incumbents in venture, traditional venture, will be the incumbents in crypto venture? Obviously, we've seen your Andreessens and your Sequoias raise very large funds for crypto dedicated. But I've had Avichal on the show and many others on the show who say, no, it's a new generation. It's an entirely new setup in terms of the talent that you need. It's a different generation of winners in crypto. Which camp do you sit in?
It's a combination. I guess I don't feel super strongly. Like, I think, A16Z is a great fund in crypto, and I have a lot of respect for them. I do think they probably got too big, but they still, have made good investments, and, like Chris Dixon, I have a ton of respect for. So, they're obviously...
Can I be blunt, Nick? They're the ones who are always labeled as the pump and dumpers.
I hear you on that. And again, I think some of that may be more recently due to fund size. They just have to invest in these token projects. I'm talking more historically. I think, if you look at who's a winner in crypto, like Chris Dixon is undoubtedly a huge winner in crypto. But yeah, I think more recently fund size has probably cause them to do some of the stuff that people, accuse them for. Which again, I don't think they're dumping. They have to be very careful about that. But I do think they are investing in some of these token projects that are getting hyped up to be dumped later. The truth is always nuanced, right? And so some of these narratives that you hear are over-exaggerated in different ways. That's what I'd say.
Nick, you sound like me to my other half, okay? It's not always black and white. Yeah. I didn't mean what I said about your mother.
Yeah.
No, you mentioned there about kind of the size of the fund forcing people to do certain things. When I speak to LPs, everyone says, well, every crypto fund right now is downsizing, giving money back. The next fund sizes won't be the same. I wanted to get, this is from very traditional US LPs. So I wanted to get your perspective inside. First, should they downsize in terms of the fund sizes that they raise?
100%. I mean, this is, again, a generalization, but I think way too much money was raised. You had people raise billion-dollar funds that just had no unique insights or, no investing prowess really, or anything like that. But they had a brand name and access to institutions, whatever it is. So, and institutions just, had FOMO and wanted to deploy. Or are they going to give money back? Or are they just going to milk management fees and deliver poor returns to LPs? I mean, it plays out over time, but I certainly think there are massive funds, and maybe some of them will just put it in Bitcoin and ETH, and maybe that will just work. We'll see. I think a strategy, a dishonest but probably successful strategy for one of these billion-dollar fund managers would be to, pitch to LPs that you're investing in, bleeding edge crypto that's going to push the space forward, and then decide to just deploy it all into Bitcoin and ETH. And if someone does that, I think they'll probably, they'll still be dishonest, but they'll be successful and make a lot of money.
Can I just ask you then, what does the next few years look like for crypto funds? You must think about this when you think about competitive landscapes. When I speak to all LPs, they're like, well, obviously our crypto budget's gone to zero, obviously. And I'm like, oh, so no crypto funds get raised? I mean, no crypto funds are getting raised now. I mean, you'll tell me maybe I'm wrong. Is that right? No crypto funds are getting raised. And what will the next, from now to the next 3 years look like?
I don't think many crypto funds are getting raised. And I think LPs are going to get a little smarter and do more diligence and not just, deploy, like crazy into, fund managers that don't really have any unique insights or defined strategy. They're going to start looking at results as well closely. And for even, these big funds that maybe do some interesting things, if you don't have really quality returns, I think LPs are going to be more skeptical. But I think at the end of the day, it's like crypto needs to deliver beyond where it's delivered to date. And that's going to, ultimately decide, institutional money coming in or out.
So that decides institutional money coming in or out. Things like FTX don't help. You've tweeted before, the elites who amplified FTX should be held accountable. What do you want to see happen, Nick? Like, heads on like gates? Like, what would make you happy?
Yeah, that's a good question. Nothing would really make me happy. I think what will happen, it just won't happen quick enough, is that, the truth reveals itself in time, right? So the people that got sucked into this perception game that the FTX was playing, that, the politicians, the regulators, the investors, they all now are trying to just sweep it under the rug and say, oh, I didn't know about this financial fraud. It wasn't just a financial fraud, right? It was a fraud of perception, which they all played a role in. And I think ultimately, like, people will realize that.
What's a fraud of perception? Sorry, just so I understand that.
Outwardly signaling prestige and inwardly, in reality, being very different and not, maybe having a bad character or being focused on soulless greed for money or attention. It's like everyone involved in that. I think it's like a kind of vortex of soulless greed for money and attention. And that's what was happening with FTX, right? Like if you ask investors, why are you involved in FTX? Sam is so good at execution, right? That's what was said. He's so good at, getting media attention and working with regulators and politicians and all that. Why was that the case? That was the surface level perception. Why was that the case? Because he was buying off politicians and regulators and media, right? And also, launched a token and in a way that wasn't very moral. So, and hyping tokens and things like that. If you look at the surface level, there were all these good things going on. There really wasn't. And a lot of people within crypto recognize that, but that's kind of the fraud of perception that I'm talking about.
Will the blast radius expand beyond Sam, though? Because, you mentioned there the media, you mentioned journalists, you mentioned, maybe politicians. Does any of that get exposed, or do they all get swept under the rug and we just nail Sam and beat the shit out of him?
Well, that's what I'm saying. You asked me what should happen. I think people should realize that it's not just Sam. And maybe Sam was the lead of it all, but it's not just financial fraud. It's kind of this bigger fraud of perception, which might not be illegal, but I think it's wrong. I think what ultimately will happen is that people will realize this, but it might take much longer. Right? It's not going to happen quickly, and maybe as quickly as I or some people would hope, but I think it will happen eventually. I think, as I tweeted kind of before this all played out, it's like truth reveals itself in time, and I think the internet itself is a very good tool to reveal truth, but it takes a long time. So that's what I would say.
Do you think there's anything for VCs? I mean, I spoke to there's so many venture funds in it. Like, everyone talks about Sequoia. Yeah, bluntly, I think they got the brunt of it, given how many were in there. Everyone's just like, oh yeah, but like proportion. Like, it was 50 million from a 2 billion fund. Like, all right, it's nothing in terms of percent. 2%, 2.5%, whatever that is. Do VCs get held accountable really, or do you think it's just like swept under the rug there?
It depends your time. So I think it's not going to happen quick, but I do think truth reveals itself in time is what I'd say. So I think Sam is going to be the one that, goes to jail and takes the brunt of it and is the obvious, but there's over a long period of time, I think people will realize the character of these people that are involved.
Before we move on to NFTs, which I'm excited to talk about because I want to be educated by you, but is there anything that you think there's a big misconception of the public in terms of SBF? They don't understand, they don't get, you constantly hear misquoted, misattributed. Is there anything that you think people should know that they don't?
The strong narrative now is that like SBF is this evil, mastermind behind this. And again, I think the truth is often, far from the strong narrative. So while it is true that SBF is, a big part of this, I think maybe what people don't realize is that the broader fraud of perception that we've talked about, right? That's a misconception.
I totally get that. And I want to be educated. You mentioned kind of fraud of perception, made me think of NFTs, which you can tell me I'm wrong about. By the way, I bought Chain Runners. I think I probably spent 25K on them. So, that's probably worth like $25 now, which, something. My question to you is like, why am I wrong to be negative still? And why are you still positive? Like, what am I missing?
Well, at the end of the day, I think NFTs are an incredible business model for creators on the internet. That's really what excites me about NFTs.
What does that look like in terms of tangible use case? Amazing for creators on the internet. What does that look like, and why is that better than the traditional mechanism?
It aligns incentives between creators and their supporters, right? So incentive alignment is kind of is a underrated aspect of what crypto can do, both within cryptocurrencies, but also NFTs. And so, as a creator, you can, sell NFTs to your supporters, and they can have, an ownership, interest in your success. The combination of those two, it's not just the business model for creators, it's the new investable asset class for anyone in the world to participate in. To me, that combination is really powerful. You're looking skeptical.
You know what?
I understand the skepticism, right? Because at the end of the day, like,
I'm a creator. Why would that work? I can do premium features. I can do paywalls. For those that are successful, I don't need to sell you a part of my business and a part of like my future earnings. You get access to my content, and I'm thrilled to have your support. But I don't need to sell you a part of my future. And then for those that do need it, most often you probably won't have a huge amount of people that want it. It's that classic problem. So I don't understand how it works.
It may not solve a problem for you right now, and that's okay. But it does solve a problem for a lot of creators that are creating content of any kind.
But okay, if you're Taylor Swift, not bad in existing businesses, I don't think. Maybe tell me if I'm wrong. And if you're a specific writer on, I don't know, knitting in England in the 18th century, I don't think it sells a specific benefit over a paywall and a higher price for a smaller audience. So I'm just trying to understand where it's better. New
technology often isn't ideal for the incumbents, right? So if you're a massive creator that is already being served well by existing business models, then NFTs might not be for you. They're certainly not for you now. They may never be for you. But I mean, what NFTs are really useful for is for these kind of new internet native creators that don't have an existing business model, but maybe have some true fans. So while Taylor Swift is never going to create music NFTs, the next Taylor Swift, who may be 13 right now, and may be having a hard time getting distribution on existing distribution channels, may sell music NFTs to 100 true fans who then may help her, spread the awareness of the music, right? So that's a use case that I think is quite interesting that really hasn't blown up yet, right? Is music NFTs and the idea of like giving a incentive for the music to grow at a very early stage, like because music itself is very mimetic, right? It's like why do most people love Taylor Swift? Because everyone else loves Taylor Swift, and she's kind of cracked the mimetic code. Is her music good? Some
Yes.
people yes, some people no. I like Taylor Swift. My 4.5-year-old daughter certainly does. A lot of why people think she's good is because other people think she's good, and I think that applies to cryptocurrency too. Why does everyone think Bitcoin is valuable? Because other people think it's valuable.
Sorry, I'm going for it. It's the end of the day. It's dark outside, if you could see the time. But I'm like, I don't think they like it because other people like it. I think they find it because other people find it, because other people have found it. So it's distributed because it's popular. So discovery is solved because it's popular. But they don't like it because other people like it. I think they just like it, and musical taste and preference has evolved in a way where actually it's largely aligned. Humans do tend to like the same thing. It's why people love pizza or ramen or whatever that food source is. Do you see what I mean? They discover it because a lot like it, but the liking is different.
You haven't read any Rene Girard, have you?
No.
Have you heard of Rene Girard?
I have.
Okay.
And I was warned that he would come up.
Well, this is exactly what Rene Girard has written a lot about, this idea of mimetic desire. And this is, I believe, what is unique about humans, right? Is that desire is actually not based internally. It's based externally on the desire of others. And so I think there's core human needs that everyone has. But outside of that, I think what we like, what we desire, what we want is fundamentally based on the desire of others. In the terms of music, I think this explains why something like Taylor Swift gets so popular. Some people may like Taylor Swift early, and then but then once she gets popular, it becomes this mimetic switch that other people like her because other people like her. That's human nature. Humans are fundamentally mimetic.
Okay, so if we take children and put them in a room and give them a carrot and a chocolate, and they have no idea which one is more popular or which one people like more, they will like the carrot as much as the chocolate? No, there is a chemical composition to the chocolate which triggers chemicals in your brain that you need and want more of it. Same thing actually with music and tones and notes. There's a huge amount of research that sad music actually can make you feel comforted when you're heartbroken, which is why Lewis Capaldi has such a strong career. It's chemical. It's not.
Yeah, no, I'm not. There is a chemical component as well. Again, it's like the truth is nuanced, right? So it's not to say that there aren't fundamental things that humans like more than others, but most people are way more influenced by others than they would fundamentally acknowledge. I guess would be my point. So there are some people that fundamentally gravitate to certain things for chemical reasons, but I think there's way more people that gravitate towards those things because other people gravitate to them, is what I'd say.
I mean, we both operate in the venture world, so I mean, I can't disagree with the mimetic nature of human following when it comes to deals. So I totally get you there. Can I ask, in terms of like people following what other people do, you obviously see that when you look at volumes in terms of purchases on trading platforms. You're a very early investor in OpenSea. How do you think about how to be bullish on OpenSea or not, given volumes being where they are?
I mean, I haven't talked much about what we fundamentally do as a firm, which is invest in kind of authentic, first of its kind products that we think are pushing the space forward. And authenticity is the thing that really matters. Authenticity matters, maybe not as much in the in the short term, but it matters a lot in the long term because it's kind of a sign of a true believer, someone that's in it for more than just the short-term money and attention. So we really love kind of these authentic projects, and OpenSea was the authentic NFT marketplace. That's not to say that their success is a given moving forward, but for OpenSea, I think if NFTs become the massive asset class that I think they will, the OpenSea as the kind of on-ramp into NFTs is a massive business. So that's my kind of long-term, very high level thesis on OpenSea that really hasn't changed since we started. And again, we're early stage investors. We're not as much making judgments about, was OpenSea a great investment at 13 billion, the last round was. I don't know about that, but do I think it's going to be an important product in the world in 5 years, much more important than it is today? Yes, because I think NFTs are important, and because I think an on-ramp to NFTs is very valuable for people.
Did you sell OpenSea at 13? I mean, it's a high price.
Yeah. Again, we still own the majority of our position, but yeah, we took some chips off the table.
Yeah, no, I totally agree and get you there. I get that. Can I ask timeline? It's such a bad question. I always listen to interviewers and I'm like, God, these questions were, and then I kind of end up asking because I'm just interested. When you think about kind of that resurgence of NFTs, reinflation of trading activities on OpenSea, is that 1 year, 3 years, 10 years? I know it's a cheap question, but I'm just intrigued what broad landscape of time you think it comes back in.
I would say 3 to 5 years. It's likely before that, but with a high degree of conviction, I would say 3 to 5 years. I mean, NFTs aren't going away, right? Like even the simplest form of an NFT, which is just visual artwork. Traditional artwork is massive, and there's a new wave of crypto rich people that view crypto art just like traditional rich people view traditional art. That's already happening in a big way. And even if that is the only thing that happens in NFTs, which I don't think it is, I think NFTs are still going to be very big. But then you have, dynamic NFTs that can change on chain based on certain variables. You have NFTs within games. You have music NFTs. You have all these other directions that NFTs could go that they haven't yet. I think that's the lens which I view a bull case for NFTs.
Nick, I spoke to Mark Cuban before the show. Always a fun conversation to have. And he waxed lyrical about you in many different ways. He gave me pros and cons, which was fun. But one of the pros, he said, was your incredible independence of thought, which kind of goes back to the mimeticness or mimetic nature of humankind and how you avoid that. Bluntly, that is a contrarian approach to NFTs today. How do you stay independent-minded when worlds and narratives are so strong today?
I don't know. I've kind of always been a contrarian in some sense. Like I think about even like in high school, I didn't really care what other people were doing or thought. Like a good example of this is drinking, right? Like I never drank in high school or college, really. I think of drinking as something that's also like super mimetic. I mean, maybe for some people it makes them feel good, and this goes back to the biological versus what's biological and what's mimetic. It's like maybe for some people drinking makes them feel good. I think for a lot of people drinking actually makes them feel bad, but they do it anyway because other people do it. This is another tangent we don't have to go in, but to answer your question, I've just always, I think, thought about things a little differently and wasn't really influenced by what people thought. I think my parents just raised me very well. I've always felt mentally strong and never felt really insecure about anything. I think insecurity can cause people to like fill a hole, to be searching for more money or more attention or things like that. And I've just kind of always stayed grounded. So I don't know, maybe those are some reasons, but
it's amazing to hear. And I listen, adore my mother and love parenting and children. So I love it, but not to feel insecure is a very difficult thing. I think everyone is insecure in some way. Do you disagree? I'm fascinated. Like, if you are the person who doesn't feel insecurity, that's amazing. Like, well done, Nick. Like,
no, I'm not.
We should study.
There are certainly things I feel insecure about, right? So I'm not saying I'm secure about everything in my life, absolutely, or something like that. But I don't know. I do think a competitive advantage that I have, especially in the crypto space, is like a mental strength or something that I'm not constantly trying to get approval from anyone, really. I'm just kind of living my life. And again, if I think about it, it's like maybe my parents are a big reason for that. I don't know. I've never really thanked them for that, by the way, if they're watching. Thank you, Mom and Dad.
I mean, an episode that touches on the heartstrings, Nick. You are just killing this show.
There's stuff I feel insecure about for sure. And there's, we all do. I don't know. I do think that's maybe an explanation for, again, my ability to not chase things, I guess.
Cuban also told me that you can be a little bit dogmatic, Nick, when you have a position or a mindset. How are you cautious that you're not too dogmatic? Do you agree that you can be? And how do you sense check yourself to ensure that the dogmatism doesn't lead to maybe ineffective decision making?
Yes, I think I'm principled, and sometimes that can be an issue. I think that is certainly a flaw of mine, and I think it can also be a good thing, but there are situations where it can be a bad thing. I don't know. One thing I think about is like I think we all live kind of in our own world. And we all have a way that we perceive the world. And I think there are people that are kind of too in their own world. And maybe sometimes I can be too in my own world. And then there are people that maybe are too out of their own world and, paying attention to, what everything else that's going on. And there can also be an extreme of that. So I think finding a balance of like kind of being in your own world and having principles that you live by, but also seeing, what's going on in the world deeply and paying attention to that and kind of combining those two. I think that's really the approach that you need to live however you define in terms of happiness or success. I guess a good practical example, right, is Solana in the crypto space. So you I'm sure heard of Solana, and
of course, yeah.
And Solana, to me, we use this framework of like there's purists and there's tourists, and the best crypto projects are kind of at the intersection of purists and tourists. I have historically viewed Solana as a very tourist thing, because it came in kind of right at the beginning of the last bull market. It was, aggressively marketing. It was also one of these insider VC coins that sold a lot to early insiders who then marketed the shit out of it and kind of sold it to retail. So there are all these things about it that, from my perspective, are tourist, right? Maybe I'm looking at it from too of a purist of a perspective, and I'm too dogmatic. I think the jury is still out. Like I'm not. Some people would say I'm a Solana hater because some of my tweets in the past or something, but I'm very open to Solana. I've talked to, some interesting founders that are building in Solana right now. I still haven't really seen anything from Solana that's new and pushing the space forward in unique ways, and I'm kind of waiting for that. But that's kind of a practical example of like, and by the way, the people that invested in Solana have done incredibly well. So, I missed a big investment opportunity as well. So again, these are things that's an example of a way where maybe I'm too dogmatic, too purist, and I'm constantly trying to reassess my frame and make sure that I'm not missing things because of that.
Okay, final two, but they're kind of tied together, which is like you learn a lot from wins and losses. What's your biggest win, and how did that impact your mindset? And what's your biggest loss, and how did that impact your mindset?
Biggest win, I mean, we've talked about it. I think it would have to be OpenSea. That was a product that I just believed in from a user perspective more than anything. It's like I was buying and selling CryptoKitties back in, I believe it was late 2016. Initially, on the CryptoKitties website was the only place that you could trade CryptoKitties, and they charged 5%. And then OpenSea was just a product that allowed you to trade CryptoKitties for 2% rather than 5%. If this is truly an NFT, users can do what they want with it, right? And so it's just a marketplace to allow people to buy and sell these kind of off the main creator's website just made a lot of sense for me. And that was why we invested. And at the time, they came out of Y Combinator, but it wasn't a hot deal at all. Actually, we led the round, and we were kind of trying to convince our LPs to invest. It wasn't like, and some of them did and did incredibly well, but it's like there were crypto funds at that time. Everyone kind of looked at NFTs as kind of this stupid thing that didn't make sense. For the most part, that was the Silicon Valley kind of perspective and narrative. And we let kind of our user perspective kind of guide us. And that is, I think, what allowed for that big win. The loss, I would say, or I don't know if it was how you framed it, loss or mistake.
Where do you mark OpenSea today? If we talk about LPs and how they think about book value, and you can say, Harry, fuck off. But
yeah, it's down. I would say down significantly.
Is that like 1 billion? Is that like 5 billion?
You're in the right ballpark, I'd say.
Good. Okay. Yep. No, won't push. I'm a Brit, so I can kind of sense when you're entering a sensitive enough zone. Okay. Biggest.
Yeah.
Loss.
No, I just don't. I mean, I want to be sensitive. I can tell you off, but I just want to be careful with for the company and stuff like that.
I totally get it. In terms of the biggest loss or miss, they kind of can be either or. What was the biggest loss or miss, and how did that impact your mindset?
Interestingly, I would say it's also OpenSea, right? Because when we invested, we only invested $500K initially. And that was, again, like at that time we had a $26 million fund. Our mandate was, checks between $500K and $1 million. So it was, within our mandate. But yeah, we invested $500K, and then we brought a bunch of our LPs in to invest between $500K and $1 million, call it. So that was one where, I learned if you have kind of conviction, you got to be more aggressive.
Did you have the conviction then?
It's harder to have conviction when you're just starting off. So it takes lessons like this. So yeah, I think we did have some conviction, but part of the reason we were doing that at the time is because we didn't really fully believe as much as we should in kind of our investment thesis, and we thought it would be a good thing to for relationships and stuff like that, to bring, deals to our LPs, right? And so that was the thinking. In some ways that I think a lot of first-time fund managers do that, and that could be a good decision, by the way. It's like it's good to build strong relationships and to help other people get into deals and stuff like that. But at the end of the day, when it comes to like generating returns for LPs, which again is what we're trying to do in venture, it's like that was not the optimal decision for that.
Did you sell across rounds on the way up? Because I think this is another one that just a lot of managers don't know. It's like, should I sell in one chunk across rounds? Did you sell kind of continuously on the way up?
No. Yeah, on the way up happened quickly, and it was more just a feel thing than anything else. It's like we actually invested on the way up a little bit, and then sold on the big way up.
Whew. I'm sure also those LPs reinvested with you after bringing them into the seed round of OpenSea. I'm sure they kind of said, yeah, fun too. Yeah, we'll do that. Sure.
Yeah.
Totally.
Yeah.
Listen, I want to do a quick fire with you. So I say a short statement, you give me your immediate thoughts. Does that sound okay?
Yeah, that sounds great. Let's do it.
You can be an LP in a seed firm, a Series A firm, and a growth firm. Which ones?
I'm just going to use funds that I am LPs in because the funds I want to be in is kind of like newish ones that aren't super well known. Because I think the well known where there's strong narratives, and basically the newest ones, I'm at a point where I kind of can be, and I do that. The seed fund I'd say is a fund called Pronomos. Patry is a very interesting guy that was one of the founders of the Seasteading Institute. He's a very, I would call him principled in some ways, libertarian, who his grandfather is Milton Friedman, a famous economist. And he's been very deep in kind of seasteading as an idea for many years. And are you familiar with seasteading?
I'm now looking at seasteading, but this is the first time I've seen it. So
seasteading is kind of one of these out there ideas that got some media attention just because it sounds so crazy, which is the idea of building kind of new jurisdictions on the sea that are outside kind of existing jurisdictions, which could lead to more innovation in whether it's in finance or in biotech or healthcare or whatever. That was the initial idea that they tried to do, but then they kind of learned that that was really hard to build these structures that could exist so far out in the sea that they were in kind of truly international waters. It didn't really work. So Pronomos is the idea Pronomos, I think it means good law in, I think Greek. I could be wrong on that, but it's basically the idea that you can create new territories within countries that the government of the country could carve out new laws for, and that's the idea of Pronomos, is kind of investing in these new kind of cities, basically. I really like kind of, again, bleeding edge kind of. I think if you can, what I learned from One Confirmation is if you can be kind of this early stage fund that's investing in this kind of new category and be kind of first of its kind, then I think there's really high upside there. So that's kind of what Pronomos is doing, very outside of like the traditional kind of Silicon Valley, but I think it's very interesting.
I love that. Series A and growth.
I'm an LP in a fund called 1789 Capital, which the founders are Omid Malik and Chris Buskirk. They are basically creating a America First venture fund. I guess you could call it at a high level. I think this aligns with my sentiment in a lot of Silicon Valley, is that it's there's a lot of soulless greed and just this desire to create these kind of massive funds, create massive attention. And I think, again, Sequoia is the best example of this. And 1789 I view as kind of this anti-Sequoia that's very much focused on kind of America First, kind of mostly growth stage, but some kind of Series A type funds. And like one of their first investments was Public Square, which is kind of a Amazon of kind, but focused on but values that are very different than Amazon.
I'm fascinated by that one. I, to be fair, I also was not expecting two firms that I have not actually heard of. So that's fantastic. Let's move to, what's your favorite consumer brand and why them?
You don't like NFTs, Harry, right? So this might be surprising to you as well. But one of the things I love about NFTs is that they're effectively user-owned brands. And so my favorite consumer brand, which again, this is a PFP project that you might not think of as a brand, but CryptoPunks, right? CryptoPunks is effectively a user-owned brand. There's not a ton that's been done with the brand yet, other than just there's 10,000 of these 8-bit pixelated characters that all have different traits. But there's a really strong community. I love the artwork. I love the community. And I think over a long period of time, there's going to be increasingly interesting things that come out of this consumer brand. So CryptoPunks is my favorite consumer brand.
You can have dinner with anyone, dead or alive. Okay, it's your lucky night. Who do you choose?
Rene Girard.
Sorry, I'm just laughing because
Is that surprising to you? Or?
No, I just feel really guilty for arguing with you.
Oh, and I'm like, not at all. No, I love it. There's no reason to feel.
What would you ask him?
I'd ask him what he thinks of what's going on right now in the world in a lot of ways, whether it's in U.S. politics, whether it's in the Middle East conflict, and how his framework applies to real, I guess, U.S. politics, Middle East conflict. Because I truly believe that his framework could be a deeper understanding of his framework could be a huge catalyst for more peace in the world. He's the father of a lot of these frameworks. So thinking about, one, how you kind of apply the framework to those, and then two, how do we grow awareness on on a lot of these frameworks?
That was going to be my question. If we wanted to start our journey with Rene Girard, what should we start with? Is there a specific piece, book?
The Scapegoat would be the first book that I would read by Rene Girard. You could also YouTube. There's a few really good interviews that he gave at the tail end of his life. That would be kind of how I would start.
Listen, I totally agree, and I'm going to add that to the show notes, and I'm also going to try it and let you know what I think. Tell me, what was the single strongest belief you had which turned out to be wrong?
One of my really strong convictions within crypto is that prediction markets are going to be massive. A prediction market is very simply a financial market for any outcome of any event in the world. So you could have a prediction market for who's going to win the 2024 presidential election in whatever country you're talking about, or is Israel going to do a ground invasion in Gaza, or is Bitcoin going to be over 10,000? Any piece of information in the world you can create a market for, and I think that is really powerful. It could be the most powerful thing that you could do with crypto. Because right now, everyone speculates on, whether it's cryptocurrencies themselves or NFTs. We could argue a lot of that. I think a lot of that is nonsense. There is a small portion, which I obviously believe is very important, but a lot of the speculation I think isn't very, very valuable at all. But if you could create like global liquidity around information, I think that could be very valuable for the world, because, you have, how do we consume information today? Media, whether it's, the New York Times or whether it's on X, and everyone that creates media has their own biases. And I think if you can incorporate massive amounts of information, many different perspectives into a market, and it reveals a price, which reflects kind of a probability for an outcome, I think that's very valuable information for the world. And this can be done in crypto because of the global payment rails and how easy that it is for people around the world to participate and contribute. Basically, yeah, it looks like you have a question, but prediction markets haven't happened yet. I've been, Hayek, who's a famous Austrian economist, he wrote about prediction markets back in 1945. Friedrich Hayek, he's written a lot of great stuff, basically saying exactly what I'm saying right now, that how useful that prediction markets could be for the world. It hasn't happened yet. It was one of my early bets in crypto. We invested in an early crypto project called Augur that didn't work out. And it hasn't worked out yet. in a big way. So that's, I guess, what I've been wrong about to date. But you know that I'm dogmatic, I'm principled. I still think they're going to work. So I haven't given up on them yet by any means. And Polymarket is a prediction market platform that has found some success recently. Still by no means kind of mainstream, but could be.
Market timing is the hardest thing in venture. Always.
Yep.
Final one for you, Nick. 10 years time, it's 2033. Where do you and One Confirmation want to be then? What type of firm do you want to build? You could build the next multi-billion-dollar crypto firm. You can stay small. You can expand team. What do you want One Confirmation to be, and who do you want to be?
I really kind of want to be doing much of the same that I'm doing now, but I just want crypto to be much more important in the world. If we've invested in a lot more products that have brought in crypto to many more users, billions of people are using crypto. There's still a lot of innovation and stuff that's happening. We want to continue to be kind of bleeding edge crypto investors that are investing in the new stuff. A lot of people that come and go. I am in crypto for my lifetime. I just want to be kind of doing what I'm doing now, but with crypto being, much more important. I don't have podcast hosts like you that are still questioning me about NFTs, right?
Or Rene Girard, either one, my friend. You just don't have a carrot and a chocolate in one room, otherwise, Rene's over. But Nick, I've loved this. This has been so much fun. You can see why I like to do the research, but don't really listen to that much of it. You've been amazing, so thank you for joining me.
No, I appreciate it. And for real, I told you this before, I really appreciate how much effort that you put into your podcast. It's clear that, again, your success too was not luck. It's a lot of hard work and determination, and that comes through in the prep and everything else that you do. So thank you.